Legends, welcome to the what am I saying? Welcome to the stream, the Daily Bias Show, where we dig all charts as they relate to crypto. Hello, Legend. Richard, how you going? So, sorry, let me just get this all sorted out. We are tracking the Liquidity cocktail brewing. We have this Liquidity cocktail brewing, and at the moment, we're in that 2 to 3 week volatility window where we have these potential catalysts on the horizon. And if these liquidity catalysts come into fruition, that essentially is what can power a Santa rally going into the end of the year and going into the new year. Now, if you've been keeping up with my channel and my X and these streams, you'll know that I believe there is the potential for a big counter trend rally, and we do have some other signals, historical signals, that would support the rally from anywhere December, Jan to March. However, we track specific charts and triggers to stay aligned with what's actually happening rather than speculating. So the key liquidity catalysts, yeah, be good to break record. We hit 5 yesterday. Let's see if we can get 5 consistently. That'd be pretty cool. So to keep up with these liquidity catalysts that we have on the horizon, we've got the 3 key catalysts. One is the rate cut probability stays high into December. That's a check for the moment. We're still at 84%. Now, we don't have any more key economic data this week. Next week, we have ADP payrolls. Now, these payrolls aren't taken as seriously from the Fed as the actual payrolls, which won't come for a few weeks after. However, the market will still digest this in some way towards the sentiment towards another rate cut, right? So that will play into the following week, which is when the FOMC is expected. Hence, from now till the FOMC is our key volatility window, because it's not just about rate cut trajectory at the moment, because we know the rates are quite high. And if we get this rate cut in December, as I've been talking about, I think this is only short-term liquidity because we don't have the aggressive trajectory of rates coming lower just yet. Hence, if we do get the rate cut in December, along with these other 2 key catalysts that we're tracking, where QT actually ends. So I don't know, I have seen talk that the Fed is planning to end QT in December, but words and actions are 2 different things. So we need to see that the QT actually ends in December, as well as that the TGA starts draining. And we track all these in net liquidity, because it's all well and good to talk about these things, to even hear policymakers talking about these things, but none of this like, it's all speculation until we see it in the charts, right? So we need to be tracking the key charts that's gonna give us the signal on whether the actions are marrying up with the words. And hence, that's why I track net liquidity, this indicator that I built, which aggregates the Fed's balance sheet, the TGA general account, and reverse repo market. Because that's essentially where we'll see the actual supply and flow of liquidity coming into markets. Now, the TGA and the Fed's balance sheet won't update till tomorrow. Tomorrow my time, probably be... Yeah, well, it's probably today. I don't know. I get confused with the times. But anyway, it's likely today or tomorrow we'll get new data coming in from the Fed. And that's where we'll be able to see any type of meaningful move in net liquidity. But if we just jump into quickly what we want to see, one of these key things we talked about yesterday or on one of the past streams is the TGA wallet has been refilling. Hence, the government's not spending, which means that it's been a drain on liquidity, as we've felt across the markets. Well, when I say markets, I mean crypto, obviously. And we're at that 1 trillion level, and we're still paused. Now, when that data comes in for this week, we want to see it either paused or, even better, starting to come down. If it's starting to come down, those are signs that the government may be starting to spend, or at least they're not refilling their wallet anymore. So that would align with the liquidity cocktail that's brewing. And into the next couple of weeks, we want to see this Fed balance sheet start, at the very least, just keep rounding off. But if we want to see real liquidity coming in, it needs to go like this, right? They need to be expanding their balance sheet. Hence, the liquidity cocktail is brewing, and the next 1 to 3 weeks is what potentially sets up our Santa Claus rally if all of this comes into fruition. Now, I don't know, nobody knows how hard we're going to rally, how long we're going to rally for, but all that matters is that we just pay attention to the charts. And even in and of itself, for the liquidity cocktail, structure trumps everything. Bitcoin structure trumps everything. And right now, we are getting that initial bounce that we've been talking about, right? We had a decent move yesterday. What was that? Like a 4% move in Bitcoin. We've had this bounce, but as we've been discussing, we're in a bit of no man's land, right? We haven't taken major liquidity down here. And the last time we took major liquidity was here, but we didn't really have the reaction where I thought we would into the yearly open. So the market essentially, in my opinion, right now is in a phase of making liquidity, right? So if it's making liquidity, I want to wait till it's taking liquidity before I start getting into any heavier positions. And considering we've got the volatility window as well over the next, 2 weeks, this is where I'm watching closely to see what setups form, right? So before we jump straight into Bitcoin, let's do our quick round the grounds. We'll, on markets. Now, the spreads did come down about 5%. We track the spreads as they relate to market expectations of liquidity and rates, basically. But nothing meaningful at the moment, right? And the rate cut probability is still high, so still expected a cut in December. And the 2-year, which more closely marries the market's anticipation of where rates are going, is still down here in the lows. So there's nothing really to report there overnight. The DXY, we've seen a nice little pullback. That's what we were monitoring yesterday. Whether the DXY actually starts invalidating this cycle ending pattern, because we've got the cycle ending pattern that we've observed in the last 2 cycles where the DXY bases and begins its macro trend, right? The DXY's basing, and we want to see if this is the beginning of the macro trend, then that's mirroring the cycle ending pattern, which means strength is pouring back into the dollar, right? So the DXY, like I mentioned, like this can provide short-term relief if we start giving this pullback, but until the DXY is below here and building daily structure down towards these lows, this is a big range that we don't know is going to be resolved and might be a bigger base to the macro upside. However, from a counter trend rally perspective, a move like this in the DXY is very supportive of crypto catching a bid, right? At least in the short term. So hence this is on watch. We are seeing some type of rejection, so some weakness in the dollar there. Now we'll jump straight into the indices, right? Another good close. Now it's starting to look stronger, right? It's looking like this was the deviation on the structure lows. We're back above the bands that we've been tracking, right? Because the historical signal, we start testing these lows, the bands start crossing red. Now we're back above the bands. What we should expect for strength is for the bands to provide support, but build new daily structure back up to the upside, right? And again, that would support our Santa rally and our counter trend rally, because the sooner the NDX and the SPX and the indices roll over, the less likely opportunity for Bitcoin to rally. Just revisiting the NDX and that cycle ending pattern as well, we've seen here this on our dash that we track during the cycle ending pattern where the DEX is basing and beginning its macro trend. The NDX just keeps trending up for 280 days after Bitcoin's topped, right? So we can't forget that, because the key thing to track there is if the NDX rolls over sooner, right? Sooner than the 280 days, which is currently forecasted for March. If it rolls over sooner, Bitcoin's just going to keep rolling over as well, right? Whereas if the NDX maintains some strength and keeps making its highs, that gives us more potential for the counter trend rally. And if you're a bull expecting a new parabola or price discovery, well, you definitely don't want to see the NDX rolling over, right? So that's basically like our gauge on the overall size and direction of markets, right? Because if Bitcoin's just having a correction and the indices just keep moving higher and higher and higher, and even invalidating these historical patterns and just keeps showing more strength, well, that could just tell you that the Bitcoin correction is just a risk, a high out on the risk curve risk correction, right? Whereas if the global markets are also rolling over, well, we're in for a much deeper potential bear market and correction. Hence, that's why we track these things and these key signals. The RTY, the Russell 2000, which is the all-important breadth gauge, so showing us whether the breadth of capital is deploying across markets, kind of like a risk sentiment gauge, is having a nice strong move up again as well. So we'll need to see how it reacts into these highs, because if it is in these distribution patterns, it is going to take the highs again. However, it's a good move, right? It's something to be positive about right now with these 4 solid days straight up after testing those lows. So all in all, so far, the signals we're seeing support a Santa rally or a counter trend rally coming in within the next month, but we just need to keep watching those liquidity signals, because essentially that's going to be our major confluence. If the liquidity is coming through, the global markets are also still in strength, and then importantly, Bitcoin starting to give us some bullish structure, well, then that's our recipe. That's what we need to see to be bullish, right? In the shorter term. Now, as it develops, as it continues to develop, and you guys already know what I need to see. I've pointed it out here, the ideal bull case on my X. So that's what I need to see to turn macro bullish. However, all these ingredients to me look like they may be aligning to give us some type of counter trend rally. Nvidia finally had some type of green after it's been straight down since since the start of November pretty much, and even since earnings it had that reaction. However, again, we're still just tracking how it trades relative to the SPX, because if it starts giving those bearish divergences from the SPX, that has historically been a signal on an early signal on weaker price action and a weaker market. So right now it's still moving pretty much in conjunction, right, as the SPX is moving. So if the SPX goes into its, what we'll be on watch for is as the SPX goes into new highs, new all-time highs, if it does, right, we need to see if Nvidia is also catching the bid and following up into new all-time highs. Because if it's falling short, that needs to add a layer of caution to the way that we look at markets. That's the round of grounds. Another thing I just want to flag, actually, before I forget, we do have to keep an eye on Japan, right? Because this feels like the overlooked potential massive liquidity event that could be a big drain on liquidity if it comes into fruition. But in a couple of streams, I can't remember which one, I think I even did a post on X, so you probably find it, where I explain how Japanese liquidity is a major liquidity source for global markets, and it kind of underpins global liquidity. So the Bank of Japan rates are very elevated comparative to the last years. Like, we haven't been this high since the GFC. The Nikkei keeps losing its strength against the JPY. The Nikkei against the JPY. The USD just keeps charging against JPY, right? So the Nikkei, not the Nikkei, what do they call it? The yen. The yen just keeps losing strength against the USD. So I wonder where that leaves the Bank of Japan, because if they hike, that could be a big problem for global liquidity. Okay, just look into the Japan carry trade. Just jump on ChatGPT and ask it to explain to you the Japan carry trade and what it means for global liquidity, and you'll find everything you need to know. But their next rate meeting is on the 18th and 19th, and they've got next week their, I don't know what you call this person, their policymaker, let's say, speaks. So this will actually be an important event that could drive some volatility that we need to be aware of. And then obviously the rate decision, 18th, 19th, right? If you want to be bullish, you want them to pause, right? You don't want them to be hiking. That's just something we need to keep on the radar. Now let's move into our favorite crypto chart before we jump into crypto, right? Because again, we're seeing a signal of potential internal liquidity coming into the market to support this potential Santa rally, right? Because we're up here at these key range highs, breaking out for here, and Bitcoin and crypto has much lower to go. Okay, as you can see historically, when we break out from this range, weekly bands are bullish, weekly trends are up, we're going into a deep bear market. However, we're at the range high, okay? So there's plenty of room to move down to support the counter trend rally, and that's what we're on watch for, okay? We are seeing a pause happening here, and even a move from here to here would drive significant internal crypto liquidity. So that's another chart that's on watch for us at the moment. So where does that leave us? Well, we've got liquidity cocktail brewing that so far is supporting, is giving us signs that liquidity may be coming for the short term by way of rate cut, but we've still got the next 2 weeks to see if those other key catalysts play out. We've got the global markets already giving us bullish signals, like they're still high time frame bullish. We've got the DXY starting to come down, which supports that short-term risk bid, which again supports short-term rally. We've got stablecoin dominance at the highs and starting to show some signs of potential relief, which again supports internal crypto liquidity, which means Santa Claus rally. So now we've got quite a few signals stacking up to suggest that it may be time soon for Bitcoin and the crypto markets to have at least some type of relief, and if the fuel from the liquidity comes through, a bit more than just relief, a bigger counter trend rally. Let's have a quick look at dominance before we head into Bitcoin, and then we'll take a look at some other stuff, right? Again, just to revisit what we discussed yesterday, we're watching dominance to see that if dominance the main signal right now is if dominance picks up like this, okay, while Bitcoin and crypto is going down, that is a bearish signal, because that is the internal crypto safety trade where capital is just rotating back into Bitcoin, okay, whilst the market is going into a bear market. And that's normal behavior, right? Into a bear market, I should say. Whereas if we keep rejecting here, it just means that in this counter trend rally, people are still putting their money into alts. If Bitcoin is building bullish structure and starting to rise again, and it's reclaiming dominance, well, that's the signal that would align more with price potentially setting up for maybe even some type of run at the all-time highs if we're also getting the liquidity bid. Okay, so just in summary, rotation, if it keeps going down, it means alts during the counter trend rally, and it's likely these are all the exit rallies, like the final pumps before a bear market. Okay, if this keeps going down. If it goes up, but crypto is down, then that supports bear market safety trade. Capital's just exiting all of its alts to be back in Bitcoin. If it's trending up, Bitcoin's building bullish structure, and even better, if we've got all the other bullish signals that we need to see in liquidity and other markets, then that's the scenario that would potentially support a new parabola or price discovery for Bitcoin. That's the ultimate bullish scenario. Actually, I don't usually look at it on this chart. Let's go over to here. Let's quickly start with Bitcoin. Right. Now, we are coming into our first area of key resistance, being the bands. Okay, we've had a decent bounce so far, right? Where there's no structure shift, obviously. We've got our 2 candle pattern that I explained in the last session, where if Bitcoin wants to roll over now, this is a valid structure swing point. So if it rolls over down into here, this would be a valid new high now, because it's got at least 2 inverse candles from the trend, okay? Which would bring our structure high down to here, meaning all Bitcoin would have to do is get above here to be bullish, right? Now, that's the ideal scenario for me to even be interested in some type of longs down here for the counter trend rally. However, we're coming into our resistance now. So my key considerations really right now are, as we're still in the volatility window, I anticipate that might reflect in price, okay? And this might be our range from here to the yearly open. If the volatility window closes and all of the liquidity signals point to we are getting the liquidity coming through, and at the same time Bitcoin is putting in its kind of SFP and giving us a reaction, then that aligns for me to go, okay, liquidity plus Bitcoin showing signs of a reversal pattern, that's like the ideal bullish setup for me. But Bitcoin could just do this as well. It could just start building internal structure, okay, bullish structure. And if we get the liquidity supporting that bid, well, that's where it gets a bit more complex, because we're entering this internal structure, but because the high's still up here, we're still bearish till we come all the way up here. And then if we take out this high, and then we can kind of base around it, that's what we need to see to keep being bullish until some sort of weekly structure develops, right? So the challenge we kind of face at the moment is, if Bitcoin was to just turn bullish and everything lines up and it just keeps heading up here, there's not really much we can do. We can't really be bullish until it conquers this level. Hence, that's why I would rather it bring levels lower, give us a much nicer kind of structural base again around here, to tell us that we've got good support, good price acceptance for Bitcoin at an asset, as an asset where it doesn't want to go lower than here, and players, you know, the bigger players accept that price there, for the macro future, right? Rather than it just like, if it just goes up like this, it just doesn't leave much in terms of base structure and confidence that we've created acceptance for price, right? So that's kind of what I'm watching, right? Because we still don't have any new weekly structure developed yet. Now, something I was taking a look at is the way that we moved in the bear market in 2021, 2022. Weekly structure here, it didn't mean the 2 candle rule, but again, like I said, sometimes we use a little bit of discretion. It is a 4-week period. We can see there's a low here, and there is the 3 candle, you know, which is the traditional swing point pattern, where you have candle 2 is the highest candle, and the candles on the left and the right of it, the highs are lower, right? That's the traditional method. I like the 2 candle method. So if you gave that a swing point, right, it means that, yeah, see, I wouldn't really give that. See, it means this is internal as well, right? So really, this was our structure. There wasn't too many weekly swings, right, on the way down. If you were, I guess I'm not really an Elliott wave trader, but they'd be looking at these waves, right? 3, 4, 5, 1, 2, 3, 4, 5. But usually that then means A, B, C correction. Look, I'm not an Elliott wave guy, but if we just look at how many weekly retracements we had a minor retracement here on the way down. Maybe you might have called that a minor retracement. Here was the major one. There was 2 major retracements, right? Here. 1, 2, right? So we haven't, if we are, as the signal suggests, heading into that macro bear market because we're macro bullish, but we do have the short-term signals to support that counter trend rally. That leads me to think that maybe this is our first major one that we have in weekly structure, right? And whether it does this, and then it comes down, lows, and I'm kind of looking at, I think I went through on the last stream, this area. I'm looking at this monthly. I'm looking at this monthly candle here. This has precedence for me for the next bottom somewhere around here. Right. I also look at, if we take from the low to the high, okay, the 618, very common pivot, key high time frame pivot retracement level. So hence, I think this area is going to be a good area for a potential bottom. Again, I don't speculate too much. I like to just follow price action. But we got to pay attention to some of these signals, right? Build some context so we're not completely blind. And if we look at, cool, we're going to have maybe 1 to 2 major structural retracements during this macro downtrend. Does it potentially look something like that? That's basically what I'm considering, right? Because if we have this short-term rally, I believe it will be to develop the weekly high, because we haven't developed the weekly high yet. Since the all-time high on the weekly, this is it for me, right? We had 1 week of retracement here. It's not a valid structure point, the way that I look at structure. Hence, That's why I'm looking at this high time frame order flow here, the weekly gap, and we've got these major levels here, which currently aligns as the daily structure level, is the distribution. Now we know this is a distribution range, right? Because it broke down. So any range that forms, if it breaks up, it's a demand range. It was an accumulation of sorts. And if it breaks down, it was a distribution range. So it's a supply range. So when I look at this, I go, cool. So this was our range, okay? And then I say, because it broke down, that's a supply range now, right? And what happens when these big ranges break down is the pattern is usually base or range, you might call it, breakout, mitigate, continuation, right? So if you look at that, we got range, okay? Then the range, the breakout, the mitigation usually comes up to mitigate the previous range. And sometimes the mitigation can go deep into the range, right? Sometimes if it's very strong momentum, it will just tag the range and move, right? But you just think about that. You think base, breakout, mitigation, and the mitigation is where you want to fill your positions, okay? You don't want to touch the breakout. And if you had a thesis that suggested that you wanted to be directionally where the breakout was headed, you should have positioned within the base and within the range. Okay, so base, range, breakout, you wait for the mitigation, and on the mitigation is where you look to fill your positions for continuation, right? I'll just show you how this, another example of this, and again, we'll just go to here, right? We've got base. Now, whether you wanted to draw the base here, right? Or if you were doing it on the daily, maybe you would have taken this base, depending on how you looked at the markets, right? Just for this sake, we'll take this as the base, okay? No, sorry, it was so we'll call it the demand, but we know it's a demand base now. It was an accumulation, right? Because it led to the upside. So if we took this as our base, now I see this as, base tested and reclaimed, okay? So that adds some strength to me. So here, if you saw all this, you might have wanted to be early into positioning, right? And that's where you got your base, and that's where, if your thesis was, cool, we're going to be heading to a bull market soon, that's where you would have been speculating, putting your stops down here, right? As you know, I've explained in different stream, I waited till we cleared these highs and I accumulated through here, right? Now, same process I just explained to you guys is base, here's the breakout, right? And if we use the top of the base here, then that would have been your confirmed breakout. Here's your mitigation into the base, okay? And then there's your first major continuation. See? So that's just a way to consider how price moves. Base, breakout. So in the breakout, we don't want to be shorting the breakout, right? We want to wait for the mitigation. In the mitigation, we can expect price to come back, like it's in the name, mitigation. It has to mitigate where it broke down from. So that's why a lot of people trade break and retest strategy, right? Or breakout and retest, or what's it called? Underside. I don't know. Or there's all the different strategy names for it, where you break down for a level, you come back up, underside, retest to the level, and keep going. Well, it's this similar concept that I'm talking about on this, when you look at this macro, how these macro price action plays out. We got the base, build your position in the base if you already have a thesis for the breakout. If you want to be more conservative, more risk averse, then wait for the breakout, because the breakout is essentially what confirms your thesis. So you got base, breakout is a no trade zone, and then mitigation. Okay, it's coming, and you can expect that it's coming back to at least mitigate the base. And this is where you want to start filling your positions. Maybe depending on your strategy, you might have limit orders set from here into the base, okay? Because you know it shouldn't take out this base, because if it takes out the base, then you're wrong, right? But what you're expecting is, if there's momentum, like there was down here, the mitigation out of the base will be short. So remember, our base was here. When it breaks out, you actually got the minor mitigation. You actually got, because if we drew this more cleanly, you got these mitigations here. That's where you would have been filling positions. And then you got your continuation. So base, breakout, mitigation, hence that's why I'm looking at, because if this is really strong momentum, you know, there's instances where we may not even mitigate. So that's why we've got these other key high time frame areas laid out. Maybe we'll start turning from the weekly fair value gap. Maybe we'll start finding resistance into the weekly bands, as we have historically, right? So those are all the areas we'll look. But the main point is, we're in the breakout phase right now here, and there's no shorting in the breakout phase. I'm talking about the macro positioning here, right? We're looking at the weekly time frame. We're waiting for this development of the next weekly high, which leads into our mitigation phase, where we mitigate where we broke out from. This is what we want to be positioning into for the continuation. Thanks, Legend. Yeah, I think you know, I guess it's just another way. Everyone has their ways of explaining what price action does. And what you'll often find is we're all talking about the same things, but I find in trading, we're all kind of observing patterns in one way or another. Whether it's a pattern on the screen, whether it's a pattern in behavior, whether it's a pattern across multiple charts and multiple signals, they're all patterns. And if you can learn to observe patterns, that is a key factor in your trading, okay? Forgetting the psychological part, right? But in that, how you observe your patterns is up to you. You know, I like to create my own systems, because when I systemize something, my brain digests it and sees it easier. So hence, I come up with these somewhat systems. And to be fair, nothing that I talk about is my own. Like, it's all things that I've picked up along the way, whether I know it or not, from other traders I've watched, other people on YouTube, books that I'm reading. Okay, just because I use different language doesn't mean that I created or own or any of this stuff. Like, it's just things I've picked up along the way, and then I've put my own color on it specifically to be able to explain it to myself, to make sure that in my mind, I know what I'm looking for and I can make the pattern relevant to me. So what you'll often find is the thing that I'm explaining is the exact same thing someone else trades, but they just call it something different, or the way that their brain makes or has pattern recognition just sees it a different way. But a lot of the time we all end up at the same levels, right? That's the funny thing about trading is you could probably go onto X right now, and you could probably find that at least 60-70% of people are looking at the same levels, but there's such a massive variance between their profitability, because it's how you actually trade those levels, right? Like the difference in me and someone else looking at the same levels and actually trading them is then a whole nother level of execution, psychology, a lot of that other stuff. So yeah, you'll often find like how many people are looking at the yearly open, right? And going, oh yeah, yearly open, that should be, yeah, exactly. We all see it. Perspective is reality. I mean, what's that saying? Perception perception is reality, or your perspective is your reality. You know, how you think is what you believe, sort of thing. How you see the world is what the world is, right? So it's the same thing when you come to your trading. However you make the patterns in your head is how they'll appear to you. And what you'll find, like these levels, I guarantee there's plenty other people talking about these levels. The yearly open, surely. Everybody was talking about the yearly open as we came down to it, right? It's probably why it didn't work in the end and it didn't bounce, but everybody was talking about it. I'm not the only one to see this fair value gap here. I'm sure other people are tracking quarterly levels, but what happens when price gets to that level is often the difference, right? Because you can look at a level and think, oh yeah, this has significance, but what systems and strategies do you have in place to ensure that you can execute at the level? And then once you've executed, what are your systems and strategies in place to ensure you know how to manage your trade? You know, what what do you do if it comes back to your entry? What do you do? When do you move your stop? Like all these different things. I guess that's what creates the difference between traders and their results. Hey, it's because a lot of the time we're all looking at the same levels. It's what happens and what you do at those levels and how you behave and what systems ultimately you follow to get you into the trade and get you out of the trade. I'm sure many people bought Bitcoin down here, right? But did they sell it here? Did they get scared here and panic sell it? Did they buy let's say they bought the base, and then when Bitcoin started racing, as I mentioned, you don't buy the breakout, right? You wait for the mitigation. Did they chase the breakout, and did they fill their positions and not have a good strategy in terms of how they size their positions so that they were only nibbling in the base, and then through this breakout right up into these highs, they chased price up with bigger size, right? And what that would have done is initially maybe their entries were down here, but as they chased price up, their entries would have started going like this. But if they increased their size as price was going up, right? Instead of their entries trailing like this, they would have jumped like this to this. And if they stopped, then they got scared here, right? And they're like, oh, I'll just hold. And if it goes below here, I'll cut my position. And then when this happened, they chased this again and started buying more positions with more size, going, oh, we're going into a bull market. And then they got here, and now their entry is, you know, here because they've added so much size through the breakouts on the way up. And they've gone, oh, we shouldn't go below here. And then we got to here and they started panicking. They go, oh, I'm just going to, I'll sell half my position. And that's now at a loss because they've trailed their stop here. Then we got to here and they dumped the rest of their position and they've just made a massive loss when really they had the right idea down here, right? They were buying the base, but they got their position sizing wrong. And then they chased, their strategy wasn't right in understanding maybe the price action system, and they chased the breakout and increased size at the wrong time, right? So instead of sizing up in the base, maybe deploying 50% of their capital in the base, or even 60 or 70% or whatever it is, they had a strategy to make sure that the base is where they deploy the chunk of their capital. They had then a system to ensure that they don't chase the breakout and they wait for the mitigation. And then their strategy was, cool, 50% in the breakout, 50% in the mitigation, okay? And then the stop is trailed after the mitigation, right? And then after the continuation, then their strategy should have been, cool, we're gonna trade major swing bottoms, or we're gonna trade the macro bands to guide our stop. You know, that's what makes the difference that's all the system and the strategy that happens between the levels, right? Because it's easy, it's not so hard to buy a bottom, and it's not too hard to sell a top, right? But what you do in between those levels is what makes the difference in ultimately your P&L and the money that you keep. Should we take a look at some altcoins? We discussed ETH yesterday, I believe. Right. And the main thing I was saying on ETH is the weekly structure it's quite a deep weekly low, but this won't actually be weekly bearish till down here. Right. Hence, I mean, this is a pretty big sell-off, but hence if the daily turns up and turns bullish on this thing, which right now would be this level here, right? That's the current daily structure high. If the daily turns up, then your daily and your weekly is bullish on Ethereum, right? So it has better structure behind it for macro continuation, potentially into, if we are getting the big counter trend rally, then that could be the final, potentially into the final high. And it does somewhat of this, like weak highs situation and rotates or goes further or falls short, who knows? But structure looks a little bit better when you zoom out on the macro structures. Actually, Sol was an interesting one. Sol, when I zoomed out on Sol, right? First of all, I was looking here, and if we can reclaim this low, this is Q3 lows, right? If we can reclaim this low before the end of the quarter, and we haven't swept the highs, right? So you can see when Sol sweeps quarterly lows, it often leads to a bullish following quarter, right? Sweep, right? But on the same, like when it starts sweeping the highs, that's a danger sign. So hence I saw that, and if, again, aligning with the potential short-term rally, if Sol closes Q4 above this, it potentially means it could rally, maybe somewhere to these highs. But that sets up the range for me on Sol, the macro range, where if we do have a big counter trend rally or something bullish under the brewing, let's say, then this could be a good play on Sol when I zoom out, because even if I look here, the other thing I was noting is with this move down, we've resolved these sweeps. Now, when I say we've resolved these sweeps, every time I see a sweep, right, when I see these sweeps, what I often find is when the candle sweeps the previous candle, it wants to at least mitigate the other side of the candle, right? So here, I'll just point it out here, right? This candle swept here and it mitigated this side, right? Or whether it did it the other way where it swept here and it mitigated this side, right? This candle swept here, so it came eventually and mitigated this side, right? This candle swept here, so it needed to mitigate this side of the candle that it swept. This candle, see, this one didn't quite sweep, right? But then here we got the sweep here, and hence target was up here, mitigated this candle. Now this candle swept here, but it didn't come down to mitigate this candle. And when you look at price action, after it swept this candle, right, it's not its immediately candle here, and this low's already been mitigated. So I was looking at this low here to see if this trigger gets invalidated. So hence, swept here. The next candle was still bearish because we had this big sweep, right? But it mitigated these lows, creating an inverse trigger. So to me, this was resolved, and now the new target's back up here, right? Now, this is where I'll point out why Sol also became a little bit more interesting to me, is because from July, we started sweeping, but we never mitigated this candle, the original candle, right? So it got swept here, double sweep here, okay? Now, through the current price action, we've now mitigated these sweeps. So hence, when I'm framing a macro lens, now I'm looking at two things, right? I'm looking at the fact that the quarterly may resolve as a sweep of the previous quarter, which potentially sets up Q1. And then on top of that, we've now resolved these sweeps down to here. So in December, if December starts to give us some sort of triggers, like maybe it starts to become, maybe December's an inside bar candle, right? Maybe it's a candle that looks like this. Right? Maybe it's a candle that looks like this, and in Jan, right, again, and this is all based on if we're getting that counter trend rally. Like, you've got to retain context when I go into these different charts. Just because I'm saying this setup now, it's still potentially weeks and months in development, and we've still got to consider the environment that develops over that time. So I'm just pointing these things out early though, because this is how I put it on my radar, because the last thing that I ever want to do when I'm trading is not be prepared for my levels and not be prepared for setups when everything aligns. I don't want to be looking for setups when it's too late, right? Hence pointing these things out now. So this one was the one interesting with Sol, where even if December now, so first and foremost, if we close back above these lows here, which is also now the Q3 lows, right? So if the quarterly closes above Q3 lows, that sets up Q1 as potentially more probability of being bullish. And if the monthly now, because we're closing month on month quite bearish anyway, if the monthly closes as a sweep here, that's potentially a little bit more bullish, but it's not that relevant. But it makes me think that December, if we get some type of inside bar and then January sweeps December, then that would be the setup on the more macro timeframes. But even before that happens, depending on how price develops, even if this low, so say we are going for one more push lower before we then get some type of rally, I'll be watching this low here, because if this low ends up being swept, it still sets up potentially January. But essentially, this is what's framing my high time frame context on potentially a Solana rally, on a Solana setup if we do get that counter trend rally, because it is now in this value kind of beaten down area, right? So if you were just a range trader, for example, all right, and you were looking at this range, okay, and you wanted to call the range highs potentially here, right? Range highs, maybe these are your range lows. Okay, we've never been able to find acceptance above these highs. We've tried to push, rejected, tried to push, rejected. Okay, we are in the value area of this range, like the deep value area of this range. Where's it? Right, we are in the discount area of this range. So obviously, if we're rolling over and we're going bearish, then yeah, like even from a weekly perspective, straight down. Actually, I just picked up on that too. Like, this is our weekly low. We've swept our weekly low, structure low, because this is a big range right now, right? Because if we look at the weekly turned bearish here, right? Turned bearish. Okay, this is internal price action. However, with internal price action, it's internal bullish, so we can still treat it as internal price action. It just means that this can't be bullish until it takes out these highs. So it still adds context to me. It still adds support to the fact that if this is even in and of itself here starting to give the weekly signals now, where remember we talk about make liquidity and take liquidity on a weekly level. This is taking liquidity, right? So we've got a signal of take liquidity there. So now if we just jump down onto the daily, all right, if we're using our 2 candle rule, the daily highs here, the daily structure level. Now you can use the traditional rule and there is some type of structure here, but let's just leave it down here for now. Right, hence we've got some context here where Sol, obviously the daily's bearish, right? We've got these key levels now where if the quarterly closes above here, we're going to resolve as a quarterly sweep. Okay, we've now resolved all of these monthly sweeps. Hence, there's good context here for me, right? Where if now on the weekly and the daily, if we start getting those triggers, Sol could be setting up for some type of rally as well, right? So that's on my watch list. Let's have a look at the rotation indicator. Like, it's pretty fragmented. Obviously, you got to ignore versus itself. So the key thing we need to be looking at with Sol is how is it playing relative to Bitcoin and ETH, right? And it's been bearish, right? We know that against Bitcoin, it turned macro bearish through here. But if you look at how price is developing now, if we go back to our base concept, let's call this demand. Base has been tested here. Breakout. This is potentially our mitigation, right? Now, as long as this base isn't taken out, again, this is another signal to me that's aligning for, right? This is the weekly as well. So this carries a lot more weight where we've got the breakout. This is potentially our mitigation. This is where if you were from a sold to BTC perspective, this is your best place to be positioning, because not only are we mitigating, but we're getting a deeper mitigation back into the base. So if Sol does have the rally and Bitcoin is not leading as it's showing in the charts and in dominance now, you'd probably expect this to at least come back up to the 5, maybe even the 618, and that'll be its final rotation most likely, right? And if you look at context on what happened with ETH when it played out a similar pattern, ETH to BTC up here, right? It did a very similar thing, okay? And when it did come back from this breakdown, price discovery, not price discovery, sorry, what am I saying? We need retrace. It did come back into these key levels. Now, it did do a pretty high retrace. I don't think Sol will do the same thing, given the current context. So hence, yeah, like if we're coming down, have I got this mapped correctly? Right down into the lows here, yeah. Right, you'd probably expect it to be coming into here. So there's our base, breakout, mitigate the base. This is the low, right? Because here is where weekly structure shifted, right? And we haven't created any structure through here. So this is our weekly low. So this is still bullish structure, as long as it doesn't take out these lows. And you could expect, that's why, hence, these are all looking, this is looking like a good Sol setup to me, if we're going to get that traction. And if we look at ETH here, we know that it turned bearish against ETH up here, right? But against ETH, to me, this is still needing more development, right? Because we haven't got, now, our last week, it hasn't even really developed a weekly high. We'd say the weekly high is here, right, at the moment. Not the 2 candle rule, but we've got a pretty clear swing point where the left side and the right side are lower. I'd call that weekly high there. So in and of itself, this is not basing to me yet. Potentially this could end up being our base if Sol either comes and tests this base and turns over. That would confirm it in weekly structure. But even if it starts turning like this, comes back, just gives us more context to suggest this is a good base and it's starting to create structure, then that would be a better base, right? These bases always don't form perfectly how you want them. But the thing to consider here is, even if it just rallied into here to make its weekly high, this is still going to be significant. It means it's going to outperform ETH. And if it's outperforming ETH in this phase of market, it's probably going to be outperforming Bitcoin too, right? So like this. And if it is heading somewhere up there. Hence, to me, it all still seems supportive for the setup. I'm going to be watching Sol. Last thing we'll quickly check out is CAS. Sorry, Richard, I know I've left you hanging on that one. So CAS is showing some strength. Rich, you flagged this one for me. It was a good one. Right, so first and foremost, if we minimize these charts, which I'm going to explain in a moment, we're seeing the rotational strength coming through. Now, the 1 day is in real time. That's literally today. So carries a little bit less weight. Like when you see this, just 1 day, that could flip any minute. But we've seen now, we've had a solid month of outperformance. Okay, the main thing that concerned me with CAS when we were over here is this pattern that I've seen that's very present in assets that have a hype cycle. Like they have a really good hype cycle and attention. And what they typically do is they have this big kind of expansion up, but then when they get sort of close to the ending peak of expansion, they start doing this, like a channel sort of thing, right? And then they break down, usually retest the channel, and then keep breaking down, usually coming all the way back to wherever that key point of expansion is, right? Down here, okay? Sometimes it looks like this. Sometimes it does this, breaks, okay? And then comes back and sweeps it one more time, and then doesn't even give a strong signal, but you get this sort of channel that happens. And the way that I think about it is the move's already somewhat done through here, definitely done through here. This is all like chasing now, like it has these corrections, and you can see how it's starting to round. So relative, it's not making major moves. Like this was the major expansion. This was a major consolidation. You had the, you had your base, you had, see your mitigation of the base. That was all those major moves down in there, right? And then you can see channel, right? And then you can see retest of the channel when it breaks out, comes back in. That's a short there. Retest of the channel is a short, and then it's cool. Let it play out now. And because that's where around here I was like, ugh, I don't like this thing. I think I remember it was about a year ago. Yeah. Now though, it's coming back into these points of where it broke out from. So this could see, and to be honest, it still looks like a chart that's moving into a bear market for me. So aligning expectations, I don't see this thing going absolutely berserk unless we get all those other bullish triggers to go back into a bull market. But it's getting some attention. There could be a good rotation play here, right? So back up into some of these highs, or at least somewhere around here. Now, if we're looking at, right, you could say that this started, let's jump out onto the weekly because it's got a lot of price action here, right? So it doesn't have a weekly high yet. So that makes me think if we're trading this thing, this is the current structure. That's an internal low, right? This is the last low. So let's draw this structure out. Here, that's where the low was broken. Okay, so that means to me, this was the last weekly high, right? So to be bullish, to actually be weekly and macro bullish on this, it needs to flip this high. But now, just using this structure as framing, if on the daily it turns bullish and we get the rotational signals and we get a good setup, this would be your range that you'd be trading in, and you'd be targeting some of these key big weekly levels, right? I'll be looking at, this is our most recent weekly fair value gap. You'll find price often pivots from the most recent or push from sellers. And then you've got this other key weekly level here. So I don't know why it's doing that. Weekly level here. Right. And we've got our current weekly low down here. Okay, if we jump out onto the daily, now what are we seeing? We're seeing, first of all, pay attention to the bands and pay attention to the V, right? We want to be trading this side. So what we want to watch now is these daily bands, okay, to provide support, and the bands to start. And if we're looking at positioning on this thing, we want to see rotational flows stay green. Okay, this is our base that has now been tested. Okay, we've got our sweep on the base. So remember what we talked about, base. Okay, we're in a potential mitigation phase. Sorry, not a mitigation. We're in the base breakout phase. We want to wait for mitigation. So we want to wait, and at the same time, that mitigation will provide us with info to suggest if this was the bottom of the V as we're coming into, and then bounce. And this is where we want to be filling positions if you're trading this thing to trade higher. And then again, that's where I'll be marking out daily levels as well, because once this turns bullish, obviously we'll be trailing with daily structure, etc. But we don't know where this is going to turn over. This is all the fun of trading, because we still got to assume that the weekly is still bearish, and until we get above there, we don't know where it's going to turn over. And this thing could well and truly put in a new weekly high, come down, take out this low, and then maybe that's an SFP low to take this out, and then it wants to continue bullish again and flip weekly and daily and then go bullish. That might be the big move. Just depends what kind of move you want to be in for, and what the context is. So hence, that's the kind of setup that I'd be looking for. So you can kind of just apply that base, breakout, mitigate, continuation strategy, or what would you call that, like a approach. And if you're using my bands, yeah, like you've got the bands that look like they're, let's color this just a really light green like this so we can still see what's going on. And we'll call this and we'll keep this on the chart so we can come revisit it at another stage and see if it plays out. Base range. All right. Get rid of some of these drawings. Right, so this is now our daily low, primary low, because the structure's shifted here. Okay. So now what we're looking for is these bands will start separating, and I wouldn't be positioning according to the rules of the system. We cannot position into a breakout. We must position into the mitigation. So the mitigation, what are we looking for? Well, we're looking for price to at least come back into the base, right? So hence, if you wanted to take this approach that I've given you, you make one of your rules where you will not buy breakouts or sell breakouts. And you'll set your alert here. I'll do that, right? We'll set the alert here. And that's where we're interested, right, to potentially touch this thing. Now, you got to be okay with the fact that this might just break out. It might just go, right? And that might be the case, and maybe you've got another system or strategy to get involved with it. But if we're using this system, that I've just shown you, then we must follow the rules, and that means we can't touch this thing until it comes back into this base range. You also got to consider that it's now a 39% gap to your stop loss. Like if you traded this thing on the daily and you're going for this more high time frame swing trade, if you entered on this breakout, you're gonna have a 40% stop loss. Like how much does the thing need to move for you to even make a 2R? Like I wouldn't touch a trade unless I can make at least 2R, right? So it needs to move 76%. You're gonna be sitting there for ages. However, if it comes back at least into here, we know when this thing moves, right? This is 100% in 30 days, 100%, right? That was the last weekly retracement, right? 150%, 35 days. So you'd expect that if you're catching this move, if this is the start of the move, right? Are you going to outperform? Like, are you going to get 200 odd percent? Like, these are some of the things I'd be thinking about, right? Let's say it's 100% move. If it's somewhere to there and you're buying this breakout, not worth it. Yeah, exactly. Like it's showing the rotational signals, and from a setup perspective, it's looking pretty good. Like we've got our base setup forming, right? So yeah, I'd just keep an eye on this thing, and yeah, come back in, and that might be a potential area to start positioning into it, following that strategy. Now, if we just quickly revisit the pattern that I was showing you, I'm going to flick this on the line chart. All right, this pattern, this major like distribution sort of thing that goes on, and it just keeps, like when you see these, here's hype. See it? This is why I'm looking at hype, right? And I believe if it's going to come back all the way back down to where the initiation of this expansion was, right, it should come down pretty much down to at least here. Hence, I'm watching hype now, because wherever it comes in, that's something that's on my potential shortlist. And once it gets down to here, depending on where we are in the cycle, I think hype can be a good token as well. Right, I'll show you one that's already played out. TIA, this had a massive hype cycle. All right, and you can see it here. You can see it had the massive expansion, and then it still did vertically perform this pattern, but you see it again, right? And then here didn't come back. Sometimes it just will puke straight down, but you'll see it did come back and take out all of this. All right, so we did it. And you remember, just think about it. Think about how hyped TIA was back here. It was modular blockchains, like that was the whole narrative. Hype has had, all through here was the hyperliquid narrative, the perp dex narrative. Right? And it's still actually like, that's one narrative that I actually believe in, to be honest. It's probably one of the only ones right now that I look at and I go, oh, there's such a use case for that. And Sui, you can see it here, the Sol killer narrative. When Sol was taking on ETH, then everybody was looking for, because Sol was potentially the ETH killer narrative. Now the whole narrative was, okay, if Sol can do it, what's going to take out Sol? And Sui had its massive hype run there, okay, and it did it there. And see, when it puked, when Sui puked, it barely even gave the retest. It just got smashed, right? And if you look at where these things, like, I don't know where Celestia's going. I don't know how far down it can go, but if you look at Sui, comes back into that area that it was all initiated from, right? Comes back. So now it looks like we're back into that area. I've come back to that area again. But anyway, I just wanted to point out that pattern because Hype's the one that I'm watching as a potential short, a macro short. ZEC as well. And this is just a good pattern to have into your brains and to look for and go and back test and train yourself on, because as we transition, if we continue to transition into this bear market, this is a good pattern to trade. That's pretty much it, legends. Hope you got something out of that session. I find that even for me, these sessions kind of teach me a lot in being able to explain things. It refreshes myself. I was talking to someone about the fact that sometimes the best way to learn is to teach. And that's why I'm really enjoying doing these. So whether it's my number one legend, Richard, or we have some other people rolling through, I'm still going to be here doing these. So yeah, nice one, Ledge. Thanks for joining us, Rich. I'll chat to you again soon. And if you're watching this thing, please don't forget to like, subscribe, all that kind of stuff. You can find me on X as well. Thanks, legends.